Welcome to TradeTheNBI.com. This is John, this reports for the 6th of January, holiday in Florence, Italy, for the Befana, the witch who gives out coal, which kind of is what happened with the market briefly. So the ES, again, we had our demarkings here of the ABM yellow, which was at 47.54, and then obviously the 76% at 32, and then going all the way down to the 61, which is at 46.84, not quite there yet. This is post-market still active right now, which is why you see those changes. And what we had was that magenta below yellow was above 33. As long as it remained above 33, no problem. But like we pointed out, as soon as it dipped below, and it did that, we saw it first starting on the 50K. And we had talked about on the 50K, the narrowing range between the 0 and 100% on the Morganacci was not going to last. If there was going to be an explosion to the outside, that we just needed to follow what the signaling was, and in this case it was to the short side, and boom. So they made the faux move of breaking the 4800, but the Fed coming out suggesting it's going to be more hawkish as usual. It's just a justification to start to lighten up after having pushed things even further. We had recognized that the rotations that were starting to take place, people looking more at value companies rather than some of these extended ones, and that kind of rotation always creates a bit of a disruption. It's the perfect time of the year to start doing that. And more notably, we noticed on the NASDAQ there was trouble because we were already below the ABM yellow, which meant it was already in short territory the other day. It had already had a much weaker NBI magenta below 33, not just to mention, but also any kind of pivot that comes down around that 25, also very weak. I love it intraday when we see pivots below 25 with the magenta. It's just like a beautiful opportunity to attack. And it just started picking up speed, and once it couldn't hold 50%, boom, that just leaves it wide open. And we're at the beginning of this because if you don't get a rejection of magenta coming back up the next day, and white starts to make a move above it, definitely heading to the 0. So that's significant to note, and it'll be interesting to see if the other indices are able to abate that somewhat, but that will tell in time. Obviously, they've all had destructive moves to their readings as well. From a gold standpoint, of course, when there's big sellouts, there's always a liquidation, oftentimes in gold. And I think that's overall going to affect its trajectory towards the upside. Euro had started out strong, faded off that because tightening in the U.S. theoretically hurts the euro even more because it makes the dollar more attractive. From an oil standpoint, again, still pushing towards the highs. That's actually more problematic, and the fact that we're getting a sustained run towards these levels also puts added inflationary pressures on, which isn't going to give the Fed much choice when you have this situation that I've talked about is TLT. As it continues to drive lower and rates continue to rise, that's really the market, in essence, forcing the hand. And as that continues to drive lower, that's going to put additional pressure on the market. Interestingly enough, I put up the daily first because we've talked about this since 64K on Bitcoin, been in a relative sell signal all the way through from a pink bar standpoint as well, and we just had all the different levels marked. Secondary sells at 59 with a suggestion of the 51, then the 48, and then below the 48, there's really nothing other than, well, this previous low right down here at about 42, which was the previous lows, but 39 is positive streams from way back, August, and then below that again we have 34, and then the big coins are down at 28, and some a couple that go even lower. And of course, you don't expect those until you get significant sell signals, in which case we've been in continuation one for a long time with no steel reset for over a month and a half plus. So nothing surprising there. Of course, problematic for bull setups in that have been projecting 100K, and it's not that we can't get a turnaround. It's just that it's what the readings have been, and there hasn't been any change at this particular stage. So from that 60-minute standpoint, kind of reached a peak, but again, there's that pivot right at the 25, comes below, and that's just beautiful signaling right at that 50% range. which was right around 46.5, and boom, it just cascaded lower from there. ETH, similar situation. It had already had problems because we talked about it once it was below the 4K number, which was a psychological thing. This is some of that continuation. So despite trying to hold on to it, just broke down further. And starting off the year a little rough for cryptocurrencies. So here was that 50K in the squeeze here that we were talking about in the NBI. And there's that pivot of Magenta below 25, happened in the middle of the day before even the Fed announced its setup. Then you had NBI white moving above red, and the secondary one, Magenta, moved below. That's like crisis time, big sell, and boom, there it is. So 50K, just like we thought, would call it, and did exactly that. Now, what does that do as far as positive extremes? Well, all we do is follow where the low is right now, and we can go back, and there's still plenty more to go. We've got positive extremes down at 46.70, and then further down here at 46.40. So, still plenty of room for us to hit to. And from an intraday standpoint, we started off just back and forth, waiting for the Fed. It was predominantly still a lot of short signals, but then with the setups, because every time there was any kind of Magenta move higher, it was always being led by red, with a lot of white NBI staying up in the lead, which meant that there was inherent weakness in a lot of that. And then we had the spike of NBI white, even though it maintained itself, created a little bit of a divergence, and that can often be around 7 to 10 points, but notice it was right between these two previous algo levels that we had at 87 and 77, so only a 10-point range, and then the sell came in there right in the middle of it, and that was pretty much it for the day, because every attempt to pop was with red leading, and that just tells you where the predominant viewpoint was going to be. And when we got this post-Fed announcement right here, they had a brief spike trying to shake people around, but that was a huge NBI white in the lead, and then Magenta broke down, and people are changed color just below the 23% range right there, and that was it. We just continued the entire day without any relief, and every time there was an attempted little pop, gave a good signaling for all of those additional breakdown moves, and Magenta candles coming in saying, nope, this one's not going to be the buy, even though there was a start and a move towards it, and rejected here cleanly too with the OCs, even if you wait a bar or whatever. Led right back to previous algos, 4,700, 46.91. Supporting off that one briefly right now in post market, but a little bit of carnage here that's going to have to get worked out, and if it doesn't get worked out the next day or so, then you're going to have margin situations by the end of the week, and that will be fun. So, just like we thought that we'd get some excitement building and starting to create some activity. And of course, we're at the fifth here, so funds have plenty of additional liquidity in that to apply. The question is, are they going to apply it here? Or are they going to go to the higher yield on interest rates? And that has always been the real question mark, because safety is better than being in the market at its highs under distressed economic conditions. You get so many back and forth with some of the readings, and it's a little harder to make sense of some of these because they've altered the definitions of so many of these old indicator readings that used to be reliable to make them so ineffective now that you really have to go to some of the older, broader cases to kind of figure out really what we're looking at. Labor participation has always been one that they really can't fudge. How many people there are, how many of them are working, and those numbers don't jive with what we heard from unemployment and things like that. So this is where, all their lovely seasonal adjustments and they're just nonsense. And we can see through it because the readings will tell us, because we know where the money's going. As always, though, I will continue to update you on Skype Chat. Trade well. We'll talk to you later.